Welcome back to the channel, everybody. So we have some XRP news today. We have some Bitcoin news. We have some housing market news. We have Solana. We have mortgage news. And we have some banking news as usual. We'll get a little bit more clarification on things that are going on within the crazy banking system right now. But we're going to start here. A little bit of XRP news, and it begins as such. XRP news today: legal shadows and ETF hopes Ripple's market forecast. So then it begins here. It says, on Monday, XRP advanced 1.04%, partially reversing a 2.53% loss from Sunday. XRP ended the session at 53 cents. Then it says here there was no SEC versus Ripple case related news to attract investors' interest on Monday. It says, however, progress toward an ETH spot ETF market remained an XRP tailwind. Speculation about an XRP ETF market could intensify after the launch of the first batch of ETH spot ETFs. All right. Then it says something here about a crypto-friendly White House. It says a crypto-friendly White House could expedite the evolution of a crypto spot ETF market. I don't keep up with politics, folks. Not my thing. Not my milieu. What did he mean by that? But nonetheless, I wanted to put this idea out there also. I'm watching how a lot of business now, a lot of small business people, they're just starting up. A lot of small businesses are, they're becoming very active and very successful online. Now, wait, I know when people think online, they're thinking about US sales mainly. But here's the thing I'm seeing. Most people online are going global, right? They're like, these online websites are making it very they're shipping websites. They create products on demand. You just have to provide your logo, things like that. They're making it very easy to ship things globally and access populations where people typically in the past wouldn't be able to access it. Now, this has a lot to do with the new financial system. So that's why I'm speaking about it. I'm going to get to that in a moment. Now, one thing I did see, a lot of what they do could be made much cheaper. All right. It's still costly, especially when, I just want to insert this with the new financial system, right? Web3, because now the people are doing business on Web2. But if you insert Web3 and now they can transact, let's say we get some kind of clarity across the board with crypto, which looks like we're going towards it. Things been going very well. All of crypto should rise in the next few years significantly, especially if we're heading towards clarity, right? But if we have that clarity, then you have more and more people are going to be utilizing services that are in combination with Web3. They're completely on Web3. They may not even know it. So now you have interoperability protocols come into play, like Chainlink, Flare, Quant. You have the low cost liquidity protocols that are near instant finality, like XRP, XLM could come into play. If they play their cards right, that's going to be significant. And another thing, most people won't even know they're using it. So I'm watching how fast all of this is growing, especially, and I'm going to put this out there, especially if you look at, for example, TikTok Shop, right? Most people are not going to stop at TikTok Shop. They're developing audiences and a huge client base off of things like that. And I know YouTube, I think, has something similar to that. But they're developing audiences and a huge customer base because of that. And they're taking that off of a lot of those customers off of TikTok and off of YouTube. And these people have their own websites. Now, imagine how integral XRP could be, or XLM, or Quant, or Flare, any of this type of stuff. You just pick your utility coin. Utility coins overall, when it comes to moving value everywhere instantly, right? To custodying your own value, to lowering prices, lowering fees so you can compete better. I mean, there's so many different ways to do it. And then on top of that, there's no way that I envision Web3 not being utilized in combination with AI. AI has been beneficial on every single level to small business owners, period. For those who have actually took the time to do the training. Even banks are talking about how transformational AI has been, right? So you'll have that combination there to ensure security, to make sure that whatever chain needs to be used or whatever crypto needs to be used or whatever stable coin, that AI will help the people choose the absolute best to use for that particular offering, right? So I think that could bring a lot of value to these utility coins. It's not something I hear talked about a lot, but it's something I see growing. Right. And if Web3 is going to be serious, they're going to have to start really integrating more rapidly with Web2. And that's going to mean a lot of online businesses. It's becoming the hot thing. Brick and mortars businesses. A lot of it is a thing of the past. There's a lot of money to be grabbed online right now. Like, does that make any sense? I don't know if I said that eloquently or not. There's a lot of money there and there's a lot of value to be brought to the table. So now, and then on top of that, like just paychecks, let's say like payroll. And you have companies like Stellar. They have their payroll offering. I think years ago, Ripple also was working on a payroll offering also. I don't know what came of that, but that comes in handy. It definitely does. Because as you're growing your business, you want to start hiring people, have a team so you can expand, right? Bring in more money. You can work more hours and such like that. It makes issuing payroll that much easier. And then if you have that in combination with AI, now you can keep track of things much, much better, right? Instead of having like, a lot of these companies, it's actually interesting. A lot of these companies, they still have people doing payroll manually alone, nothing else, just the people just on a paper and in a computer typing like it's 1998. And there's mistakes that happen. I've read about it. People's paychecks, there's something missed here or there, and there's a discrepancy here or there. That doesn't have to exist in the future, right? You can have a person still do it, but then you can have AI go over those numbers to make sure everything makes sense, right? And that can be done, like I said, Web3. Web3 brings that to the table. You hear a lot of these companies now talking about AI. An example would be Flare. Now we have to see how Flare utilizes AI once they, start coming out with certain AI-based offerings. So we have yet to see that, but they've been talking about it. And then we'll take it from there. But I think that could be significant in the future. I think the future of crypto is very bright. I do. 100%. There's so many different ways to look at it, so many different things to keep up with. But now let's get back here to the little bit of Bitcoin news. All right. Bitcoin, the big dog on the block, is looking really, really good, in my humble opinion. I like what I'm seeing with the consolidation in combination with the bullishness from the large institutions. But I'm still remaining that 100,000. I'm sticking with that. I stand on my square at that 100,000. I think that's 100,000, I think, is the high. And from 80,000 to 85, I think that'll be like the low safe estimate of where Bitcoin can go. Just in the next year, I think it could go much higher than that after that. But that's, I think there's going to be a lot of dips. I'm just going by what I experienced in the 2021 bull run and how everything went. I think there's going to be massive corrections, massive dips at different times, a lot of turbulence, which is why I believe that people are going to take profit and have been taking profit faster than ever. No one wants to wait. No one wants to lose their gains. And I think you're going to see a lot of that come out of Bitcoin. And I think a lot of that's going to make its way into money market funds. I've been talking about CD accounts, but I don't see a lot of people going towards CD accounts, but a lot of people going towards money market funds. And then to store value, they're looking at gold and they're looking at silver. So I think a lot of it will make its way there as well. And, there's been reports of people keeping physical cash as well. So then there's that also. But anyway, this article is titled Bitcoin to surge over $110,000 in Q3 despite impending recession fears, says economist Henrik Zeberg. Let's hear what Mr. Zeberg has to say. Says in a recent interview, macro strategist Henrik Zeberg made a striking forecast that Bitcoin could experience a significant surge in value alongside his prediction of an impending U.S. recession. What happened? During the discussion on the Bloor Street Capital channel, Zeberg predicted a substantial rally for Bitcoin, expecting it to soar over 64% from its present value by the third quarter of 2024. The Daily Hodl reported on Tuesday. It says Zeberg reaffirmed his previous projection of Bitcoin reaching a price range of $110,000 to $115,000. That's very close to what I've been saying. Very close. All right. Very close. Indicating that the cryptocurrency is on the cusp of an uptrend that was initiated on May the 20th. He envisions a pattern of surges and periods of consolidation. Sounds like what I just said. All right. He envisions a pattern of surges and periods of consolidation leading to this price target. Zeberg also shared his outlook on the broader economy, foreseeing a U.S. recession by the end of 2024. He anticipates the recession will begin in the last quarter, with the stock market reaching its peak shortly before, likely in Q3. Why it matters. Zeberg's predictions arrive amid a backdrop of varying opinions on Bitcoin's future. Just days before Zeberg's interview, another crypto analyst suggested that Bitcoin could reach $1 million within the next 10 to 18 months. That's what they've been saying. Listen, I'm sticking to $100,000. If it goes above that, great. But I'm sticking to that. It says emphasizing the nascent stage of Bitcoin story. Yes, I do agree. Crypto is still in its nascent phase. I'm not sure how long everything will take. It looks like institutions are in the beginning stages of mass adoption right now and acceptance. But that's something I would monitor, and it would be ongoing. I wouldn't jump out the window. You know, it gets to $100,000 and it starts going a little bit above that. Now you're getting into territory where there might be a massive correction at that time. Massive correction. Even before you hit $110,000, massive dip. There's no way. I wonder if, I don't know what people see out there. I'm telling you, there's struggles right now. This is why you see so many people upset, angry. They're working more than ever. It doesn't matter what career you have or job. I see it everywhere. Doesn't matter how much money you're making. Everybody's working harder. This is what I'm seeing. What you see is different. I can respect that. So people are going to take profit quickly. It doesn't matter what it is. It goes up, they're taking profit. Gold goes up, they're taking a little bit of profit. Bitcoin goes up, they're taking profit. I said this in the beginning of the year. This is going to be a brutal and vicious and cold-hearted time period. And then especially with a lot of people, and I'm going to put this out there because I have personal experience with these types of things, extensive experience, but with people having a multitude of health problems and family members, passing away, for lack of a better word, left and right. There's no way people are taking a chance. They don't know what's coming tomorrow or next year. They're going to take profit. So that means what? That means there's going to be a lot of volatility. So anyway, it continues on. Conversely, another analysis presented a more cautious view, questioning whether Bitcoin had truly escaped the dangers, a quote, danger zone, unquote, and predicting a potential dip in its value. This contrasting viewpoint underscores the volatile and unpredictable nature of the cryptocurrency markets. Okay, so listen, right now, retail still has a huge impact on Bitcoin. I think in the future that changes. I said this plenty of times in the past, but I'm going to reiterate. I see Bitcoin being completely dominated and taken over by institutions who will stabilize that price at certain. You're still going to have volatility, but it'll be much more stable than what it is now. They will raise that up. They want their clients to make capital. They want themselves to make capital, and they will boost that up, as much as they possibly can. But until then, and that's an if. Until then, no, you're going to experience a lot of volatility. There's going to be a lot of cutthroat behavior, not just in Bitcoin and crypto overall. Overall, things go up. They're going to go down hard as well. People are not playing around. So now let's move on here. We have some Hong Kong news, which obviously ties in with XRP is deep in Hong Kong. Ripple is deep in Hong Kong. All right. So they have their CBDC platform there. So this article here is titled Hong Kong will inspect offices of crypto platforms as important compliance deadline looms. There's a lot of activity happening over there. China wants to dominate. They are a world power. And if you're asking me, if you're kind enough to do so, they are the leader in the BRICS nations. That's what it looks like to me. So it says here, Hong Kong's regulator will conduct on-site inspections of crypto platforms offering trading services which apply for a license. That's the first bullet point. Second bullet point, by June 1st, 2024, all crypto platforms in Hong Kong must be either licensed or, quote, deemed to be licensed, unquote. Hong Kong Securities Futures Commission, SFC, will conduct on-site inspections of those crypto trading platforms interested in continuing to pursue their licensing applications as key deadline looms, the regulator announced on Tuesday. By June 1st, 2024, all crypto platforms providing trading services known as virtual asset trading platforms, VATPs, in Hong Kong must either be licensed by the SFC or, quote, deemed to be licensed, unquote, which is a temporary arrangement during the process to get fully compliant. Beyond that deadline, it would be a, quote, criminal offense to operate in Hong Kong, unquote, in breach of anti-money laundering and counterterrorism laws, the SFC said. Quote, in the coming months, whilst the deemed to be licensed VATP applications pursue their applications, the SFC will conduct on-site inspections to ascertain their compliance with the SFC's regulatory requirements, with a particular focus on their safeguarding of client assets and know your client processes, unquote, the announcement said. All right. This article is titled Solana Validators to Get More SOL as Fee Proposal Passes in Favor. There's been a lot of voting going on. So I guess Solana had a vote going on. That you had a vote recently with Songbird as well. Anyway, it says over 77% of Solana governance participants voted in favor of giving validators the full priority fee amount per transaction. Solana validators will receive 100% of priority fees from transactions following a governance vote aiming to improve network security and efficiency. The previous model split priority fees between burning and rewarding validators, which led to side deals with transaction submitters. Interesting. It says validators are important participants in blockchain network as they run software to confirm transactions and maintain security. Solana priority fees are additional fees users can pay to increase the likelihood of their transactions being processed more quickly by the network. It says in the previous model, half of the fees in a priority transaction were erased, while the other half went to validators. This created a situation where validators were said to be making, quote, side deals, unquote, with transaction submitters to get more SOL, as per proposal creator Tao Stones on the Solana Governance Forum. Okay, let me also say, if you haven't already, I kindly ask if you click that like button. Click that like button. It helps the video tremendously. Like that YouTubers don't say that for anything. Once again, that algorithm is brutal. It says giving all the priority fees to the validators would ensure the validators are more focused on keeping the network safe and running smoothly, Tao Stones said. All right, so now let's move on here. Let's see if they actually, how much they give us here in this article. It's about a property crisis. This article is titled, I try to keep up with these things, very significant in a multitude of ways, but it's titled, Slow Moving Property Crisis Means Averting a Greater One. Green shoots in the commercial real estate market are springing up everywhere as investors gain confidence that the worst is over. All right. The big news in the $20 trillion U.S. property market last week was that for the first time since the financial crisis, investors suffered losses on top-rated bonds backed by the mortgage of an office building. It says, don't panic, signs are emerging that we may be closer to the end than the beginning of a shakeout in commercial real estate. I really wonder if what's offsetting that is all of these companies calling people back to work. in a physical office 100% of the time. I can't remember. There was a bank recently also doing that. I read an article about that maybe last week or two. But a lot of these companies want people back in the office. So now that a lot of that commercial real estate, if they're able to get people back in office, it's not just sitting there anymore. But I don't see another way that they're going to be able to turn this around, especially not in the formerly highly populated areas. They were more populated than they are now. A lot of people left the big cities. They went to smaller areas, especially back then. It all began back then with the redacted. People were leaving New York in droves, leaving Los Angeles in droves. But I did read some people are returning. So maybe that is having an impact also. Because as they return, they're going to have some sort of work. Now, when they return, companies are, I think, reasonably going to say, hey, if you want to come back here, you're going to have to be in the office just like before. A lot of companies are against the, what do they call that when you work from home? I'm just going to say work from home, but I think there's a specific phrase for it. So maybe that's helping them out a little bit. I wouldn't say that's anything to celebrate over, to be quite honest. Because they still have major problems, still a lot of properties empty. Those are going to be hard or near impossible to move. But we'll keep up on it because commercial real estate affects the banks clearly. We just had a bunch of big wigs come out the last month or two talking about how commercial real estate is a major threat against the banks, right? And of course, the banks are tied to the new financial system. And the worse that they do, the more that they will need the new financial system for everything that they bring to the table, all the ways of making money. And there are many within the new financial system. So, all of that's tied together. All right. So now we have a banking news here, but I think we're going to skip that. I don't want to make the video too long today. And we're going to cover a lot of stuff in the live stream coming this weekend. We'll talk about a lot of different things. I'll make it fun. And this time it'll be much smoother because now I know what I'm doing. And I'll have a rhythm going. I'll have everything prepared ahead of time. So now, U.S. homes. I'm going to cover this here. We have a lot of people on the channel who are into homes or they're real estate agents, things of that nature, or they used to be. So they may be interested in this news. And I just have my own reasons that I, try to keep up with this. This article is titled U.S. home prices hit another record high in March. And it begins as such. It says U.S. home prices reached a record high in March, reflecting the housing market's persistent affordability crisis. The S&P CoreLogic Case-Shiller U.S. National Home Price Index, a measure of home prices across the country, jumped 6.5% in March from a year earlier to a record high. It is the sixth time the index has reached a new record high over the past year. The reports show that there's strong demand for housing in urban population centers such as San Diego, New York, Cleveland, and Los Angeles. The 20-city index rose in March at a slightly faster pace than in February. It says, quote, this month's report boasts another all-time high, unquote, said Brian Luke, head of commodities, real and digital assets. It says at S&P Dow Jones Indices, quote, we've witnessed records repeatedly break in both stock and housing markets over the past year. In addition to unrelenting high home prices, the housing market is also grappling with a chronic lack of homes on the market and elevated mortgage rates. Put together, my apologies, a pop-up just came at the worst time. And it not only did the pop-up cover my entire screen, it moved the article, which is disadvantageous to say the least. Where did we leave off? Okay, it says, in addition to unrelenting high home prices, the housing market is also grappling with a chronic lack of homes on the market and elevated mortgage rates. Put together, it has resulted in a tough housing market, especially for first-time buyers. I actually saw an article. I didn't put it in this video here, but it was earlier today. And it was talking about how a lot of first-time buyers are now having to ask their parents for help in purchasing a home for the, it's getting crazy out here. It says housing affordability, which factors in incomes, home prices, mortgage rates remains in the doldrums. But there have been some steps in the right direction recently. The average 30-year fixed mortgage rate fell below 7% last week. We did report on that after rates began to surge in mid-April. Still, mortgage rates are higher than anything seen in the decade leading up to 2022. Economists don't expect mortgage rates to decline meaningfully this year and could very well remain above 6%. That's because inflation got stuck earlier this year, causing the Federal Reserve to push back timing of its interest rate cut. The Fed's key interest rate is currently at its highest level in more than 2 decades. The central bank doesn't directly set mortgage rates, but its actions do influence them. All right, let's see what we have here left. Oh, then we had an article about mortgage rates, but maybe I'll just put that in the members only section. You know what? And then we have a crypto integration article. You know what? Let's do the mortgage rate since it kind of feeds right into what we were just talking about. Let's see if they actually give us a lot here, or if it's locked behind a paywall. A lot of times that's what it is. So this article is titled "Mortgage Rates, Mortgages Stuck Around 7% Force Rapid Rethink in American Dream." And now the article just went completely blank. I don't know what's going on here. A lot of times what's happening, these websites are trying to load up there we go. Advertisements. I get it. Okay. So now let's go back here. No thanks. I don't want to subscribe for 50% off. No thanks. Not right now. It says a renter who hoped to buy a home has resigned himself to rent forever. You see the mentality here? That's what tells me that people are having a hard time. This is a harsh environment, a light depression. I'm telling people, that's how I personally feel. If you have to resign yourself to rent forever, and it's not really a choice, it's just like you just have to give up because you just can't get a home. Then society as a whole is experiencing a harsh economic circumstance. It says, and I say that because so many people say, no, everything's fine. That's what they say a lot. I hear that all the time. Everything's fine. There's no problems. And I just vehemently disagree with that. This is a first-time buyer who had hoped to refinance a 7% mortgage. Is pulling back spending everywhere else to keep up. And a young couple is making a painful trade-off for their family. As interest rates in the U.S. remain higher for longer, the American dream of affordable home ownership is attainable for longer and maybe for good. Oh, is unattainable for longer and maybe for good. My apologies. This is perhaps more than anything else, mortgage rates are the single biggest factor that determine one's economic mobility. In the U.S., mortgage rates have been hovering around 7% for over a month, more than double what they were 3 years ago. And many were counting on them coming down as inflation rapidly retreated toward the end of last year. But price growth ramped back up again to start 2024. And now the Federal Reserve is keeping rates at a 2-decade high for the time being. That unrelenting pressure has upended major life plans for U.S. consumers and could mean staying in a dead-end job or refusing to relocate for a better opportunity, which can affect business and productivity. It'll likely exacerbate all kinds of gaps in wealth as more people are shut out from buying houses, creating a wider chasm between those who own and those who don't. While owners benefited from a $1.3 trillion home equity windfall in 2023, renters saw costs remain high, redacted savings dry up, and household debt rise. The numbers are pretty bleak. Renters say there's a 60% likelihood they'll never be able to own a home, and that's ridiculous and quite upsetting to say the least. That's the highest since the New York Fed started the survey a decade ago. All right, so now that you have that information, what are you going to do with it? I'm expecting to see a lot of you in the live stream coming up this weekend. We'll see, and I expect we'll have a great time. Yeah, we'll have a good time. I'll make it fun, and I'll make it interesting. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.